Have you ever heard people talk about the stock market and thought, I kind of get it, but not really? Well, you're not alone. Today, we're going to break it down simply. No confusing jargon, no charts flying everywhere, just what it is, how it works, and why it matters in plain English. Welcome to the Knowledge Harbour, where we make money and investing makes sense. Think of the stock market like a massive digital marketplace. It's a bit like Amazon, but instead of buying gadgets or clothes, people are buying and selling tiny pieces of companies. These pieces are called shares. If you own one share of a company like Apple, you literally own a tiny slice of Apple. So when you hear about the stock market, it's just millions of people buying and selling these shares every single day. It's not one physical place, but a global network of exchanges like the New York Stock Exchange or the London Stock Exchange, where all this trading happens electronically. Now, here's where it gets interesting. Why do stock prices go up or down? It all comes down to supply and demand, which is really just a reflection of what people think the company is worth. If more people want to buy a company's stock than sell it, the price goes up. If more people are trying to sell than buy, the price goes down. It's like a giant voting machine for confidence in a company's future. When people believe a company will do well, invent new things, and make more money, its stock price tends to rise. If they lose that faith, it falls. But here's the key. Over the long term, the market as a whole tends to go up. It isn't just luck. It's because over time, good companies create real value. They innovate, grow their profits, and share that success with their owners, the shareholders. So while prices can bounce around a lot from day to day, the long-term trend generally reflects human progress and economic growth. And you might think this only matters to Wall Street types, but the stock market affects almost everyone directly or indirectly. Your pension, your retirement accounts, even some savings accounts are often invested in the stock market. When the market does well, the value of those investments can grow. That's why understanding how it works is not about becoming a day trader. It's about understanding what's happening with your own money. The best part, you don't need to be an expert stock picker to benefit. Most people invest in things like index funds or ETFs, which automatically spread your money across hundreds or even thousands of different companies at once. It's a simple, diversified, and proven way to participate in the market's long-term growth. So here's the main takeaway. The stock market is simply a reflection of business and innovation and our collective belief in the future. It moves up and down in the short term, but in the long term, it tells a story of growth. Understanding this basic idea gives you power, the power to invest with confidence and build wealth intentionally rather than just guessing. If this helped you see the market a little more clearly, do me a favor and give this video a like, and be sure to subscribe to the Knowledge Harbour. We're all about making complex ideas beautifully simple. Thanks for watching.